All right. I did not think this is how today was going to go, but it looks like this is how today is going. Guys, the stock market is completely crashing right now. We have the Russell down over 3%, the Nasdaq's down about 2%, and we have the S&P and the Dow Jones each down about 1.3% as the VIX is up over 11%. So we're going to break down the charts here, stocks I'm looking at, earnings to keep your eyes on for today, and in general, what I'm doing, what stocks am I buying, what am I looking to sell even. So yeah, hit the like button, make sure to subscribe, and don't forget to get your free stocks. You might as well here on this red day, guys, for Moomoo, up to 20 stocks with at least a $100 deposit, and your uninvested cash will earn up to 8.1% for a limited time, guys. So use that link down below or go to stocksurfest.com/Moomoo. Get your money. And with that being said, cheers. Let's dive right into the video. And today, guys, days like today call for two of these bad boys right here. We have one double espresso, which is almost out. Let me actually get a sip of it. I might need another one after this video, guys, by the looks of it, man. There's that double espresso. Can't beat that, guys. But yeah, we're crashing like crazy today, guys. And this is a prime example of a volatile stock market, right? Which we haven't really been in one as of late, with the VIX being down to 11, 12 points for a lot of this year, right? You guys know that. Now the VIX is pushing 18 points. We've been above 16 for quite some time. And this is the prime example, right, of a volatile stock market where we're up 2% one day, down 3% the next, up 2% the next. I mean, this has been a roller coaster ride, right? And the crazy thing is, guys, this morning we were actually in the green. You guys can see SPY was at 544 or 554, excuse me, in the morning, and that's after we peaked at about 553 yesterday. So we actually were in the green this morning, and we took out the highs from yesterday, and oh boy, how quickly has that changed. Now we're down over $10 per share from the peak on SPY, or about 2%, and Triple Q is down, let's see here, it peaked at about 475 in the morning. Yesterday after the bell, we hit 476, and now we're down $15 from that point. We're at 461, or down about 3%. And the biggest beatdown right now, guys, is in the Russell, which if I pull up the Russell 2000, this is down over 3%, and clearly it wants to come down to retest that 50 moving average on the 4-hour chart, being at about 2150, and that's also right by the highs from the beginning of March, end of March, right? Middle of May, we peaked at about 2130, 2150, so that's where we're probably going to find support in the short term on the Russell. So out of all the indexes, chart-wise, the Russell actually looks the best, right? Looking like it's breaking out. We're still well above the moving averages on the 4-hour chart, and we're pulling back to support, whereas Triple Q is actually under the moving averages on the 4-hour chart, and it still looks like clearly we're in a downtrend on the 20-day chart. If I clear the drawing set very quickly, you guys can see, if I get the channel tool out, are we not in this channel? We're clearly in this channel, guys, right? I kind of butchered that, but you get the point. I mean, look, we're in this channel, clear as day, still downtrending. We got rejected at about 475. Now we're dumping down, holding on 460 by a thread, and SPY is seeing the same exact thing here, right? We can see SPY is still under the moving averages on this time frame, right? And we can see, if I clear the drawing set, although it's not perfectly in this channel, you guys get the point. We're still trading within this channel. And we have a lot of big tech companies that reported already, from Microsoft to Google to Meta. We got Meta yesterday, and their stock's actually up 5% today, believe it or not. If Meta was down a lot, this market would be down even more. But we have Apple and Amazon after the bell today, so maybe those two can save the markets from this red day today. I don't know, but we had ARM Holdings report this morning, which is crashing right now, guys, down 17%. ARM Holdings is down a lot, and on the 4-hour time frame, the chart actually still looks really good. We're at the bottom of the channel right now, down 20% pretty much on the day, and now down almost 40% from highs. So ARM Holdings actually did decently well on EPS and revenue. They did 40 cents adjusted EPS versus 34 cents expected on sales of 939 million versus 902 million expected. So double beat, but maybe because of their lackluster guidance. And guys, their guidance was actually pretty good, but the reason why I'm saying lackluster is because all of these AI stocks, right, they're so used to seeing crazy guidance beats, crazy raises and guidance every single quarter, and it was pretty much in line this quarter. It's not like they blew guidance out of the water or anything like that. So that could be a reason why we're seeing a sell-off, but still, guys, the charts look good. We're in an uptrend, and this could very well end up being a nice bounce back play on ARM Holdings. I almost said the words, I mixed the words up there, but yeah, ARM Holdings, I'm watching it for a bounce back candidate, right? Relief rally play, whatever you want to call it. And it looks like it's sending down a lot of other stocks in the space. AMD's down 6.5%, pretty much right back to the lows that we were at a couple of days ago, right? So that's not looking so great. Nvidia, which I'll do a video on later today, this is down over 5% on the day, giving back a lot of the gains from yesterday, which I'm not surprised. We actually called this out to a T. And again, we'll do another video on Nvidia, so make sure you guys subscribe, hit that notification bell. And like I said, after the bell today, we're getting a lot of earnings from Apple, most importantly, and Amazon. And Apple actually does not look so pretty chart-wise here heading into earnings, man. It looks like, yes, we are fighting to hold this channel, no doubt about it, but do you guys see what's forming here on Apple? This is a head and shoulders potentially in the making here. Do you guys see what I'm seeing? We have the left shoulder right here, the head's right here, and this could very well be the right shoulder. And if earnings are not good, maybe they're subpar, guidance isn't that great, Apple could easily see a dump down, towards the lower 200s, 205, 210, dare I say lower than that. So keep in mind, head and shoulders in the making on Apple. That's a bit alarming right now heading into earnings. And Amazon, same thing. I mean, look, this actually looks like a cleaner cut head and shoulders. Head, you got the left shoulder, the head, the right shoulder right here. And we're actually struggling to break out of 185, 190 right now. So time will tell, man. These two stocks are still looking very good on the long-term time frames, no doubt. The uptrends are holding, but we do notice head and shoulders on both of them, Amazon and Apple, which I'm going to be monitoring heading into their earnings, which we'll break down later today. I'm sure we'll break them down more tomorrow as well. So what do you guys think? I mean, this stock market today is looking pretty ugly, but if you've been in the markets for years, guys, this is nothing new to you. This is really normal market activity. And yeah, if you're a beginner, maybe you haven't been in the markets for a couple years, maybe it's been a couple of months for you, this is definitely going to be an eye-opener. You're going to come to realization that stocks don't always go up in a straight line. There is volatility. There's going to be selling. There's going to be periods of weeks where stocks get hit. And yeah, welcome to the party, right, guys? So yeah, with that being said, I'm going to wrap up the video. Don't forget to sign up to my email list down below if you guys want me to send you my top 3 stocks every single Monday morning for free. All you guys have to do is put your email and your first name, and it's completely free, no spamming, no BS, just straight up stocks and charts. Check out that first link down below, and make sure to hit the like button and subscribe. And with that being said, cheers. I'll catch you guys in the next video.